Good afternoon. This is Tom Aspray with the Viper Report. Coming back after the long weekend, it looks like a lot of traders decided to take some profits and maybe pay for that long weekend. This chart of the Dow Industrials shows we were down over 300 points at one stage in the day. Now we're down about a couple hundred. See back below the pivot here on the daily chart. I've drawn some uptrends here. You know, the S1 support's at 34,809. Right now we're at 35,158. So, you know, that'd be a pretty healthy drop from this level. Certainly would get another 400 points in the downside. You can see down below here we have the relative performance. As I've been commenting on a regular basis, the Dow has continued to lag the S&P, and the OBV, you know, broke its uptrend last week. So, this decline was not a big surprise. As I pointed out to subscribers this morning to the Viper ETF report, you know, pretty much all the daily AD lines here are positive. The weekly Russell is still negative, even though it's rebounded nicely. There's a big question mark on whether it's going to be able to break out to the upside. So far, the AD lines are saying no, because even though the daily AD line is above its moving average, it's below the highs we made in early August. Also noteworthy that, you know, we're only a couple percent in the SPY and the QQQ below the weekly Stark bands. So what does that mean? That means, well, you could, you know, if you get a sharp rally, you could be back above them, but it's a sort of a high risk area. Better opportunities for establishing new long positions occur when, you know, the averages are, you know, 5 to 10% below that Stark band. So if we look at this chart, was one of the featured one, the NY Composite. You can see a pattern of higher highs, you know, going back into June. However, the stock's only advanced decline line, you know, it broke its downtrend last week, but you know, it's still showing a pattern of lower highs. You know, that's signs of a narrowing rally. You know, there's just fewer stocks are pushing, the average is higher. You know, that happens. You know, it just means you have to be much more selective and take fewer long positions when you get in that environment. New highs, new lows, similar sort of picture. You know, new highs, you know, we surged up to above 200 last week, but still line D, it's declining. And on the other hand, the new lows are rising. If you look at the daily charts, the QQQs, you can show it's still clearly very positive, both the NASDAQ 100 AD line and the OBV. We had a nice run to the upside. We saw a similar run to the upside, you know, off the July lows, lasted a little longer, and then we got this sort of softness, this 4 or 5 day period. I think that might be in the cards in the next week or so, but currently the NASDAQ is going strong today based on Apple and Netflix. They're both sharply higher. You can see the SPY, also a convincing new high in the AD line here. Formed a doji on Thursday. You can see, you know, there's pretty good support down in there. You know, so 2 to 3% pullback. See how we close today. See if the bargain hunters wait another day, so we could see another day of selling before the market tries to bottom out again. My analysis of the future as of early this morning, I always update these things. You can see the future we're down 1 point, decline much below 45.19, would break the support line A. So that has occurred. Let's look at an up. You can see we're right around in here before the open. So we've broken this trend line support, dropped well below the Stark band. So the rebound we've had off the early lows, not too surprising. MACDs were, you know, I said that a break to the downside is looking more likely. Lower highs here, higher highs in price. So this is part of every issue. So this suggests that the decline can go further. You know, oftentimes you see a more severe uptick in downside momentum. So far we haven't seen that, but it could come overnight. This is our current positions in the ETF report. We sold out half of our position in IWD this morning. We had a 28% profit on this half of this position. So, and we'll look at why that was my suggestion for the open. I do quite a bit of work on analyzing growth versus value stocks. It was quite important last fall. We got growth topping out here, so this whole rally was value stocks were doing better. This doesn't tell you that both won't go up. It's a relative thing. So when this is falling, it's saying value is going to go up faster than growth since the June low. So it's been a growth play, and recently we've broken out above this resistance here, line A, confirmed by the MACDs. So you can see the chart below of the Russell. Yeah, it was starting to lose some upside momentum. So trying to sell on strength. We made a new high on Thursday, so we had a good exit point. I think we exited this morning on the day's high. Bullish sentiment is still fairly high. If you look at this chart, you can see we have the AAII bullish percentages tick back up to 43. Be interesting to see what it is this week. But it peaked to here in April, and you'd like to see it get down here in the below 25. I think if that happens, we'll get a much better buying opportunity for a wide range of ETFs. We used to have a lot more ETFs in our portfolio in July, but we've been whittling them down as we saw an increased risk. Active managers still in a fairly high position in equities. That often drops down to 50. It's bounced lastly, but I would be guessing that on Thursday we get new numbers, it'll be pulling back down. We have been putting more of our Forbes.com contributions up on Viper Report after a week to 10 days. We'll be putting a new one up today with the monthly buy stocks we liked. Our monthly stock picks have been doing pretty good, so you might take a look. And of course, if you want some specific advice, I hope you'll give the Viper ETF or the Hot Stocks Report a try. Also in the email, you'll see there's a link and urge you to sign up with us for the upcoming Wealth 365 presentation. I have some interesting new material to show you there. And so that's all I have for today. Thank you again for tuning in.